want to take up, have a panelist argue over, talk about, and all of you also discuss it, because I think it's vital to this country's financial health. Even with or without COVID, we need financial markets. Everything develops because of financial markets. So, okay. With that, let me bring in our first, Mr. Samir Ahmed. He's been the CEO of many companies. Samir Ahmed. Samir Ahmed was the CEO of the Commodities Exchange in Karachi, was the CEO of the Lahore Stock Exchange, was the CEO of IGI Investments. Samir has a long experience in the stock market. So, Samir, will you please take on the first first part of the panel, and then we'll go further. Thank you, folks. Please keep your mics off. Please keep your mics off, otherwise we will get disturbance. So everybody apart from Samir, please switch off your mics. Thank you. There, to Akif Saab, I think why don't you do your presentation? Akif used to be the commissioner of the FCCP. So Akif, I think you kick off the seminar while we try and fix Samir, okay? Akif, are you there?
Very much. Can you hear me?
Haji, we can hear you. Chaliye.
Okay, let me just put on the presentation. My topic is, as the presentation is being loaded, the topic given to me is market infrastructure and the outreach. I'll talk about market infrastructure, the layout of the market, and then role of the regulator, that is the Securities and Exchange Commission, and of course, the SRO structure, which is a peculiar structure in terms of capital markets, which is a global practice also, where the exchanges and other capital market institutions, infrastructure institutions have a role to play as far as regulatory affair is concerned. Market, I'll start with the market layout. Is my presentation visible to everybody?
No, we can't see the presentation.
What about now?
No.
Sir. No, sir.
Well, we're seeing something. It's coming on.
Trying Microsoft Teams for the first time. Google Hangout seems to work better. We'll probably have to go back to it. Chalaji, let's see.
That was much better.
Much better, I must say. Chalaji, are you there?
Okay. Yeah, I'm here very much.
You can hear you.
Okay, my layout is market landscape, the way it is at the moment, the regulatory environment, and of course the capital market infrastructure institutions, then the market intermediaries.
आगे स्लाइड शो पे चले जाए ना प्लीज, ये तो वो फिर पूरा नहीं नजर आ रहा है.
Okay. Technology.
Slideshow at your end.
I know. I'm actually, it takes time, I think.
No problem, lag hoga, lag. ठीक है. Keep going. Let's see.
Okay.
Okay.
Actually, and at my end, it is showing as the full screen,
Okay.
but I think again the time lag will. Okay, market intermediaries, and then I'll talk about the market outreach. When we talk about market landscape, of course, the investors are the pivotal in terms of the market as it stands. This has been a bane as far as our markets are concerned. We have about 250 to 350,000 investors, be it in the stock market or on the mutual funds. And that they do take into account the double counting. So there could be investors who are in the stock market as well as in the mutual funds. While at SECP, I did an internal exercise through the share registrars. The number was slightly higher because it came out roughly about 400,000 to 425,000 investors, because quite a few
Okay, really apologies, but I think you may have to just once restart your presentation, like get it off sharing and then restart sharing because you're stuck.
Okay.
Okay, for some reason, I can see market landscape now. How about everybody else? Yeah, okay.
But things have changed at my end because as asked by you, I actually now resharing it.
Okay, no, thanks a lot.
Let's try it. Go ahead.
We can see it now.
Okay.
जी ठीक है चलिए
Is it visible to everybody?
जी अभी तो विजिबल थी. Go back to the start. Let's see. बस ठीक है. Market landscape आ गया. चलिए.
Okay. So investors, be it 250 or 450, doesn't make a difference given the population and the size of the market. This is something which has been an issue. And this is something which needs to be addressed to have a vibrant market, which you were referring to, Nadeem, at the beginning. That's one side of course, the vibrancy. Then we have the category of investors, institutional and individuals. We have a fairly, I should say, robust regime as far as foreign portfolio investment is concerned. Then we have banks, mutual funds, insurance companies, and of course brokers doing their own prop book, pension and provident fund, NBFCs and corporates. The second leg, of course, then when it comes to the investors is the companies which come on to raise the capital. You've got about 550 companies at the moment. Maybe the number would be plus minus rather than the minus, but if you go back 10 years, this number used to be 750. So number of companies have gone down. Two reasons, of course. One is the market driven in terms of why to be listed. Number two is mergers also and takeovers. And third is, I think, a bit of a housekeeping by TSX and SECP, where companies were listed and there was no trading or no free float, and they were non-compliant as far as disclosing or coming out with audited financials. Then we have about 80 odd scripts which are margin eligible, which meet the qualitative and the quantitative criteria to be eligible for margin. And of course, that drives, that is basically the basis for these scripts to be part of derivatives market also. So by default, then these scripts becomes the most liquid. So this is where all the liquidity is concentrated. So out of the 550, I think roughly about 95% trading is roughly in these or plus minus shares. So this is again is an area which needs to be looked into. And there are about 100 plus companies which are on the default accounter. Market itself is a narrow representation of the economy as far as the businesses are concerned. And of course, when I talk about narrow, there's a free float aspect also. I can share a number without naming the company. There's a company which has a free float in terms of 116 shares only. That's it. In terms of products, we have a ready market, delivery future contract. We do have cash settled derivatives, but there's no trading in those. Then, of course, we have mutual fund. They offer a variety of mutual funds from income to money market to equity, and of course, recently launched 2 exchange traded fund. And then insurance is represented in the capital market through unit-linked life insurance. And we have private pension in shape of PPS, voluntary pension system. Then we will move on to, for me personally, regulator has a role to play, and it is part of the market overall structure. And the regulatory environment has been a major issue as far as sort of inhibiting the development of the market. Some of the reasons I've spelled out. So SECP was actually created under SECP Act 1997, operationalized in 1999. Even though it is a body formed under an act of the parliament, but unfortunately the oversight by the parliament over the years is something which is lacking. There is on and off representation or presentation to the finance committees. This has been only limited to where there's a legal amendment or a certain issue raised, which was more specific, but not the performance itself. This is, I think, it's not limited to SECP. This is something which cuts across all the regulatory bodies and the role of the parliamentary committees in the overall site. Second point is the mandate of SECP. Globally, securities regulator, which is very much ingrained in the name itself, Securities and Exchange Commission. But to begin with, it had a mandate with capital market and corporate registry. But over time, insurance, NBFCs, that is, I'm not taking into the account mutual funds, but discount houses, leasing and housing finance, then later on private pensions, then later non-banking microfinance institutions, and recently secure transaction registry has been entrusted to SECP to regulate and oversee. So I think over the years, the mandate has expanded much beyond. It's a very unique, when we look at international securities regulator, you will not find a comparison as far as the mandate is concerned. I think ASIC in Australia is the only securities regulator which has a corporate registry, and they've been looking at for the last couple of years to sell it off to a private sector entity. That's a process which was started in 2016 and is still going on. Then we have a governance structure at SECP. We have 2-tier structure, the policy board and the commission itself. Historically, policy board composition has been predominantly with ex officio. And mandate is, in my view, again, people have a different view, is not clear as far as what role it needs to take to fulfill its obligation. But the last 2 years, the composition has been tilted towards private sector, predominantly. Now it's predominantly from private sector. And the mandate is something like I mentioned earlier, needs a clarity and fine-tuning. Commission has a very unique in the sense that it's a revolving top, which means that the commissioners come in and they go out, and that results in lack of continuity. But to add to this, it's last 21 years since its operationalization, there have been 13 chairmen, and only 3 commissioners have completed their 2 terms, which they are eligible under. So that's again is an area which reflects and has a bearing on the market itself, because the lack of continuity, things you have a feeling of a deja vu, or which I normally call is 1 step forward, 2 step back approach in terms of implementation of the policies. Then within the commission, there is general approach since its operationalization has been sectoral approach. So basically, one organization is divided into 3 or 4 sectors, each commissioner having a portfolio rather than on a functional. So there is a one team is looking after insurance licensing. There's another team looking at capital market licensing, and similarly, one team looking at insurance enforcement, another team looking at the capital market enforcement. So which has resulted in at times a regulatory arbitrage and even a regulatory burden, because the market landscape has changed. We have groups, we have cross-holdings, we have cross-products. Rather than being on a functional basis, it should be that is a global practice also. So functionally, SCCP is a license, has authority to license, monitor, supervise, and develop. Another area which is missing in the overall capital landscape, capital market landscape, is the SRO culture. Even though there is a legal mandate for exchanges to perform a certain function, but even the intermediary associations have a function to perform as far as oversight and compliance is concerned, but that aspect is completely missing in our capital market, which invariably leads tangling of SECP into very minor issues. This is some area which needs to be addressed for efficient enforcement at the market level, rather than apex regulator taking over each and every violation or indiscretion. Next, we have the capital market infrastructure institution. We have PSX, CDC as a depository, and CCPL clearing and settlement, PAMEX again, a futures trading platform. It's an interesting that PSX globally, general trend is towards a holding company structure, where the exchange or a holding company holds the trading platform, the depository, and the clearing and settlement function through a separate legal entities. And generally, exchanges are the driving force, because the trading volume drives the revenue for the depositories and the clearing and settlement. In Pakistan, it's slightly reverse. PSX is, if you look at their numbers, is not a profitable or financially strong organization compared to the CDC and CCPL. Then we have, sorry?
Slide nahi move kar rahi, but it doesn't matter, yaar. If it's not moving, it's not moving. So just go. Mansoor, why don't you take over the slides? Yeah, Mansoor ko control pass kar de, yaar. Let's see if he can manage it. Otherwise, you keep going.
Okay. Actually, it has moved on at my end. I think it takes time. The lag is, I think, in 2 minutes. So.
Move. Okay. Just.
Okay. So governance, even though we have moved from a mutualized to a demutualized exchange, we have an anchor investor consisting of 3 Chinese exchanges and plus 2 local financial institutions combined holding 40% of the exchange. But still, there are issues as far as the board composition, the size of the board, or more the size of the board is concerned, and the role of the board versus the management. Again, something which I am hopeful that with the coming in of the new CEO, these things would be sorted out. Yes, we have moved a lot. If we go back in time, there is a lot of technological evolution. From an outcry system, we have automated system. Instead of physical shares, we have 85% dematerialized shares. We have T+2 settlement with a fortnightly settlement, which we used to have. Now we have e-dividend facility, e-voting SIS platform in place, e-IPO platform in place, a centralized KYC. So technology has taken shape and is shaping up the capital market. Globally, if you look at it, and for me personally also, capital market infrastructure entities, they look like, they sound like, they walk like a technology company. They are technology companies. But the present structure and the HR staffing and capacity, particularly at the exchange, is something which needs to be looked at in this context. As far as the markets are concerned, there are 3 ready market, derivative markets, and growth enterprise market. Growth enterprise market was earlier called the SME market, even though it has been changed. A lot of regulatory restrictions or conditions have been relaxed, but there's no significant, maybe one or two companies are looking at it, but none has been listed so far. I think this is something which, again, a focus area to have a vibrant market. Moving on to the intermediaries, we have roughly about 250 brokers. There were 400 at the time of integration. 80-20 rules apply perfectly because 20% of the brokers do the 80% of the trading, and only few brokers are listed, less than 10, and among banks only have subsidiaries as brokerage. They are less than 8. We don't have a broker business model which actually should be able for them to do pure brokering. So there's a conflict when it comes to brokering versus the proprietary trading. Then we have a friction, something which I would request Maheen to touch on also, is the mutual fund versus the brokers. Brokers we don't have a third-party mutual fund distribution. Unlike rest of the jurisdictions, brokers do not distribute mutual funds. Brokers have a limited service range. Interestingly, the regulatory structure or regulatory framework itself looks down at brokerage as such. There is a particular provision, Section 153 in the Companies Act, which says that any director, owner, or an officer of a brokerage house cannot be a director on a listed company. So conversely, any person or a professional of standing would not like to be on a brokerage house because then that person has to forego the directorship or the officership from other listed companies. This is something which needs to be addressed to have quality governance at the brokerage industry. We don't have any professional standards, which is a basic requirement across jurisdictions, be it developed or underdeveloped or developing, because nobody can go and sell investment product. But in Pakistan, technically this can be done, be it insurance, mutual funds, or broker direct equity sales. Anybody can do that. Even my driver can go and sell these products because there's no licensing requirements or professional standards or certification requirements. We have absence of independent advisors, independent research houses. A couple of have come up, but we need more. And of course, the absence of independent distribution. I think apart from whatever shortcoming I've highlighted, as far as the market infrastructure is concerned, together with the outreach, we need to have a national investor education and awareness program. Of course, we have one of the lowest saving rates.
Akif sir, जरा 2 minute में आप wrap up कर लें. Thank you.
Okay, done. So this is the last slide actually. So saving culture is something which needs to be addressed, and it has to be addressed, I think, in sync with State Bank and SECP, and plus, of course, across assets class also, which is a real estate is another area which actually competes with the capital market. HR quality is an issue which I've touched on earlier. Accreditation mechanism is a missing link in Pakistani capital market. Generally, people operating in the market lack basic understanding of the regulatory framework or ethical concepts. Taxation is an issue. Rather than be favorable be in favor of a particular class or particular investor, they should be consistent across asset classes, investors, and investment mode. And the last bit is the digital experience. Even though a lot has happened at the market infrastructure entities, but there are brokers who are offering and mutual funds, but I think digital experience and then particularly the recent developments in terms of the lockdown and coronavirus, and I think this is an area which needs to be looked into for outreach. I'll only quote one brokerage from across the border. This is called Zerodha. This brokerage house is known has active investment in excess of 900,000 compared to 200,000 for the whole market of our market. And majority of their investors are in the range age group of 25 to 40. and they do outreach through digital platforms only. So I think that's my bit. If there are any questions, I'll be happy to take.
ठीक है जी, we'll take the questions after the panel. Okay, now I'll invite Maheen Rahman. I think before I do that, let me just say, from what I heard, Akif and Maheen, I'll leave it up to you. I think this is a mess that we have made. Regulatory, taxation, human capital, I mean, all kinds of messes. This is a mess that Pakistanis love to create in every arena. We create messes and then we wonder what happened. You got 80 scripts that are working. So Maheen, the question I want to ask for you is that if with this mess, what mutual funds are you offering us? I mean, I can't see you creating mutual funds on 80 scripts that have any value at all. Is it something that you're selling snake oil? What's happening? So Maheen, over to you. Maheen is the Chief Executive of Alphala Investments. MashaAllah, she has a number of mutual funds under her control. So please tell us about your take, Maheen. Thank you.
All right, thank you very much. And thank you, Nadeem Saab, and thank you, Samir, for reaching out to have me on this call. Lots of lots of interesting points that Akif has raised. Just wondering, can you see the presentation? Is that on your screen as yet or not?
You can see it.
We can.
Oh, fantastic. So I think, the points that you've raised, Nadeem Saab, are very valid. We are now living in a very different world from what we were even 2 months ago. And I think we need to revisit the way we do business in the capital markets, not just in Pakistan, but I think everywhere. So before I get into, what the overall changes that we might see in the capital markets going forward, I think we need to really understand how the macro is going to actually work out on this. And while it is difficult to predict, which way this goes, there are some facts that really are coming to light and becoming more apparent. So when we talk about where we are globally, well, we are in a global recession. And as far as Pakistan is concerned, we will not be immune to that recession. So when we look at Pakistan, we've now been in a lockdown for 3 weeks now. And in the span of that lockdown, we have seen cases go from 1,400 to about 8,000, 9,000 plus now. So has the lockdown really worked, and do lockdowns really do work, or has there just been much more in the form of social and economic cost as opposed to whatever we may be facing from this virus? So I think those questions now really need to be asked, because clearly lockdown has not really controlled much of the spread within Pakistan. And there's very little, honestly, even globally, to show that this does actually work as a long-term measure. But it seems to be the one that most countries are choosing to adopt. So in that situation, you are faced with a very interrupted business economy, and you're faced with a consumer a sort of wave that has very rapidly come to an end globally, and yes, in Pakistan as well, which is a very consumption-driven society. And as Akif mentioned, our savings rate is exceptionally low. So, we ourselves will have to ask the question that how will this change going forward, or will it even really change, given that neither the lockdown seems to be controlling the infection? And if that is the case, then why do we just simply not open up the economy a lot sooner than what we have been planning? So in terms of what is the good news for Pakistan, in terms of what's going on in the world, well, one, your current account does not look like it's going to come under too much stress. Unlike the last 2 years or so, where we have seen a lot of stress on the currency, we have seen a lot of stress on our import bill, because oil prices are so low and they continue to fall. And I can talk about what happened last night in the oil markets in the Q&A, but that is just simply an indication of what more there is to come in a world where demand suppression is now quickly becoming the norm. But that is an advantage for us. Our oil imports will shrink, and our sort of relatively insulated economy means we didn't have significantly huge exports to begin with. So even if exports do drop, and by a very conservative estimate about 30%, we are still seeing that the current account will continue to actually shrink over the rest of this year, and kind of stabilize next year or so, which means that your currency is fairly operating within a band of say 165 to about 170 to the dollar, and that pressure on the rupee is really not something that we are seeing coming through. Now, naturally, that has an impact on inflation and interest rates, and there too we have already seen the state bank take multiple action on the interest rate, and there was no I think there was a general consensus that interest rates need to drop, and we believe they should be dropping further because inflation is really quite benign at this point in time. So we are not seeing too much of that come through, and so we are estimating, that interest rate should really come down to about 7%. So we're sitting in a fairly benign interest rate environment, fairly benign inflation environment, and not seeing too much pressure on the current account as well. However, the bad news really is that we continue to be quite fiscally challenged. And that has implications for businesses, the way businesses raise capital in the future, and what means they will go to raise that capital for their business needs. And here is where I think our own capital markets are woefully inadequate to meet that challenge. So we are going to be relying on the government, quite significantly to, offer businesses incentives, offer them handouts, build up the social safety nets, build up the healthcare system at a time when business will be interrupted and tax revenue will decline quite dramatically. So we're not ruling out that next year you could potentially see a drop, in the fiscal deficit to, almost double it from this year. And we say probably we'll see a fiscal deficit that exceeds almost 14+% next year. So, that is going to be a key challenge that we will have to see how to finance that, whether it will be through external flows or whether it will be through internal borrowing via the state bank, which is what we have kind of heavily relied on so far. So what are you left with? You're left with a system where you have a start, stop, start economy, where you lock down, you begin testing people, you get to a plateau on the testing, you open up again thinking that you're safe, but again the infections begin to surge, and again you end up in a lockdown situation. So you're in a position now where businesses now need to adapt to starting and stopping fairly frequently, or learning how to live in very sort of isolated spaces. So the whole business model for many people is really going to change in this regard. And how equipped are we on the regulatory side, on the capital market side, to begin to adapt to something like this, if that is indeed the model that the rest of the world, and including ourselves, will be following. So just some basic, kind of predictions in terms of what may come through. And these are just sort of kind of thrown out there, but this is something that we're seeing more and more, is that economies will become more insular. Our demographics, which is our strength in many cases, is kind of shielding us from the worst of this infection. Perhaps 70% of our people are anyway under the age of 30. That's fairly low risk. Our export base was limited, so it might just shield us from a lot of the demand drop-off that we're seeing in the West. And you have a consumption-driven middle class who has really been on a binge for the last 10 years. And, it's very likely that once you lift the lockdown in totality, you will see a heavy resurgence of demand, followed again, obviously, by the same start-stop phenomena that we saw. One thing that has become very obvious is that the IT industry has a big opportunity. I think this is something that, as policymakers, is something that needs to be looked at. The industry itself doesn't even have the status of an industry. It is really quite fledgling. It's operating in a very fragmented space. But here you have an opportunity for it to really come into its own. And that's really, I think, where our focus should be, on how to develop that much more and how to bring it under some sort of consolidated framework. In terms of supply chain, I think our agricultural economy is back in the limelight. Food security is going to become important for all countries across the world. I think our ability to manage our supply chain and manage our agriculture will really determine how dependent we end up being on imported food items, in particular imported staples. And the same applies, of course, to industry supply chains. Our manufacturing base imports over 60% of raw material. Why can that not be sourced locally? Those are questions that need to be asked. And finally, I think the biggest sort of silver lining in all this is that nothing is off the table. I think the structural weaknesses that we have faced so far, whether they are in the capital markets or whether they are in circular debt or whether they are in public sector enterprises, nothing should be off the table in terms of renegotiation. So whether we are talking about IPP capacity payments that hinder the government in terms of payments, we should be looking at all of them. And I would expect that now over the next 6 months to 1 year, we will see multiple renegotiations on contracts all across the board. And this is one opportunity, I think, for us where no one will hold any specific, nothing against anyone for negotiating something else, because, and that can be a hazard as well, but at the same time, it's an opportunity to throw out something inefficient and look at something from a much more, I would say, efficient and more sort of balanced perspective. Now, what does this mean for capital markets? Well, I think our capital markets, as everyone has pointed out, really we're looking at a very small segment of stocks which can actually be traded, and those represent, say, 30-40%, 30-40 companies, which represent 80-90% of the liquidity in the market. So are we equipped in a way to allow businesses to access the capital markets, whether in the form of IPO or debt capital market raising? No, unfortunately, not at all. I think there have been many discussions in the past about creating separate sorts of exchanges, whether it's an SME exchange, I would even go further and say, is there a technology exchange, which has far less regulation and far less regulatory requirement to allow companies to come on and actually raise the capital that they need. I think globally there has been a trend towards disruption in this space, where crowdfunding has become much more viable, specifically for small businesses. And here's the reality, is that people don't want to access your, businesses will not access your capital markets because of the very stringent regulation that we see imposed. Some, do say it is disclosure requirements, but I don't believe it's disclosure. I think the regulation is designed to trip up people who are looking to come and list on the exchange. And frankly speaking, we need to make it easier. Now, over the last 2 years, we have seen improvements on the policy framework, and I can talk specifically from the mutual fund side, that we have seen a lot of the restrictions on mutual funds, specifically with relation to pricing, with relation to the ability to charge, various expenses into the funds, really has helped asset management companies to widen their distribution reach. But within that framework itself, we have over 350 funds, but I would say there is usually one or two categories of fund that become very popular depending on the economic cycle that we are sitting in. So where can this really change? I think, look, we have to realize the focus of capital markets is access to capital. It cannot just be access to the largest business units around. It has to be access to capital for all. So for that, we need the entire spectrum of fundraising, all the way from angel investors to alternate funds to seed investors to venture capitalists to private equity. These are all the host of fundraising options that come into place even before an IPO stage, which is where your capital market shows up. And what we find is that what chokes the bulk of business prior to even coming to this stage is just simply the inability to access any form of finance, because banks will only lend to the very specific groups, and capital markets really are also for those specific groups. So we find that money flows to people who need it the least. So that regulation has to be released somehow. And until we are in a position to really say that, okay, we will allow this segment to develop and then we will regulate it, that mindset, until that really changes, we will continue to have regulation after regulation that just simply makes everyone think twice about whether they should be investing in a certain product or not. Now, to be fair to the regulators in the last year or so, we have seen some innovation come out on the PSX. We have seen the launch of ETFs, etc. But again, the same principle was applied, that there were regulations in place first. Those regulations had to be then looked at very closely because a lot of them were not conducive to that. And hence, then finally, you came out with a product that worked. And that process in itself took almost 2 to 3 years. At the same time, you had REITs, which were allowed in Pakistan about 4 or 5 years ago. The second they came out, we had one REIT listed on the exchange. After that, the tax laws changed so dramatically as to make it completely ineffective for anyone to launch a REIT again. So I think from the perspective of regulation, it needs to be a lot looser in the initial stages. Yes, there will be issues, but I think you deal with them on a case-by-case basis, but you don't choke a product as soon as it it comes out there. And I think that's what we should really learn from the capital markets that are much more heavily developed in the West, is that the largest tech companies, we look at Amazon, you look at Google, you look at Facebook, essentially arose in an unregulated environment and then later on moved on to be more regulated. So that's really how innovation grows. That's really how capital markets also will develop. But I think that will require a mindset change from everyone concerned, whether they are participants, whether they are business owners, or whether they are regulators. And that's really what has to, I believe, come through. Just a question that I think Akif threw out to me, so I just address that here in terms of mutual funds versus the brokers. Honestly speaking, they're two sides of the same coin. Both, cannot exist one without the other. I think there's a lot more synergy to be gained by working together than there is to be going head to head on various issues. I think the Mutual Funds Association has always, been a big proponent of free markets, has always been a big proponent of the stock exchange. We worked very closely with the PSX this time to ensure that the stock market was indeed kept open even during the lockdown period. And, we lend our support to brokers whenever they require it. So I don't think there is a versus situation here. Perhaps there's a perception, but I do believe that, they are there to work together, and without the two on the same side, you will not see that come through. So that's broadly it from me. I'm happy to address any questions on this.
We'll get to
thank
that.
you.
Thank you, Maheen. Thank you very much. Well, as you can see, ladies and gentlemen, it is a self-created problem. Forget Corona. There was no market, there will be no market. We love to over-regulate things. We love to be bureaucratic. We love to kill everything, just like the state bank killed the non-bank financial institutions. I have a history of things that we have killed. We don't want enterprise. Instead, we want to give goodies to the boys like IPPs or whatever. So in that thing, how can the market work? So Samir Ahmed, do you have your mic yet or not? Sammy, can you speak?
Yes, can you hear me?
Okay, Sammy, now take it away. But very quickly,
Excellent.
I want to ask you this question.
Sure.
Why don't we have a market? We have so many erudite people. Why don't we have a market? And to tell me that you've got 80 instruments or 5 instruments and 200,000 consumers, why don't we shut this thing down? Why don't we stop this and just continue without the market? Go ahead, Sammy.
Okay, valid question. Okay, what I've tried to do is actually focus purely on the PSX. Obviously, it operates at a certain context. Can everybody see my slides?
Yes.
Okay, great. So I'm gonna try and answer some of the questions you've put. Some of the things I think Akif has already covered.
And
I just
speed
have
it up.
about.
Speed it up.
Sure. Okay. Essentially, what I'm trying to do is looking at the exchange, a couple of words about its history, and two of the functions. The main functions of an exchange, really, it's a platform where companies can come and raise capital. And on the other hand, it's a platform where investors with surplus funds can come and invest, hopefully profitably. So we look at those two areas, really. And at the end, I'll just give 1 or 2 pointers as to, in my opinion, what really ails the PSX. It was founded more or less just after the independence, the Karachi Stock Exchange. Then in the 70s, we had the Lahore Stock Exchange. In the 90s, we had the Islamabad Stock Exchange. These were all in the original model, which was prevalent globally. These were all broker-owned exchanges. In 2012, these were demutualized, which means they go to the form of a normal shareholder kind of company, which all other companies are. So these were demutualized in 2012. This should have happened at least 10 years earlier, but there was a lot of resistance in this process. Although technically the process has taken place, one of my contentions is that the mindset still prevails, which is the old mutualized body, which is run mostly for the benefit of a group of people. Okay, in 2016, all of these exchanges were pushed by the regulator to consolidate, and the PSX came into being. As Akif mentioned, the Chinese investors came in with a 40% stake, and PSX itself was listed in 2017 on PSX itself. This is the number of listed companies over the years, last 5 years. This data is all drawn from the PSX annual report of 2019, which is the last one available. As we can see, it's static. It's not even static, it's coming down. In fact, the oldest data that I could get from the PSX website was for 2001. In that year, 747 companies were listed. So the number of companies over a period of time is actually coming down. So this basic function of companies coming to list and raising capital, that's not being done. Let's look at it in a little bit of more detail. If we go down straight to the fourth row, the new capital, the new companies listed. Period of 4 years, we've had just a handful of companies every year. By the way, the last company which was listed was more than a year, well, exactly a year ago, April 2019, which was Interloop. So the National Stock Exchange has not listed a single company in the last 1 year. So that basic function of raising capital, helping companies raise capital, that's just not being done. A few other figures of the listed capital and the market cap, which is obviously the market value of that listed capital, but let's skip that. It could be argued that apart from the IPO, there are other capital raising venues. For example, rights issue. The rights issues are what existing companies come to the market and raise additional capital. Again, if you look at the numbers, these are minuscule. I mean, we're talking about 15 billion, 12 billion in a year. So sum total is that in terms of the capital raising function, it's really not doing anything. The other side we've also talked about is the number of investors in this country is pitifully low. I checked the National Clearing, which runs the UINs. December 2019, the number was 226,000 people in Pakistan, which means 0.1% of the population. Just to give some idea and put it in context, Bangladesh has 2.8 million investors. And this is a country with a comparable population and a comparable per capita GDP. So again, capital raising, we're not doing it. Providing a platform for investors, we're not doing it. These are the new investor UINs every year. So in the entire year, the previous year, 14,000 new investor accounts were added on. Last quarter, I looked at December quarter, 2,800 accounts have been added on. This, mind you, is a national exchange, national institution. Some additional numbers on the number of new mutual fund unit holders, better than the stock exchange numbers, but again, small. When you look, I think the latest number I checked this morning for total number of mutual fund holders in Pakistan is about 400,000. So again, we're looking at a few 100,000. We're not even in the millions, which is surprising because when you look at the historical asset class returns, this again is from the PSX website. The real estate is not given here. Arguably, it may have given better returns, but I don't think the data is very reliable for real estate. However, of all the asset classes, if you look at the KSC index, the historical returns are fairly decent in the high teens at least. So it would seem that there is a case to be made out for investors to come in and invest in the stock market. This is just another additional information on the number of brokers. This Akif also mentioned, this has been falling over the years, and it's now down even further. It's this is these were the old brokers, and over a period of time, a lot of them are giving up their trading rights at the exchange. This is another important parameter that globally we look at exchanges. We look at the market capitalization to GDP ratio. This gives you an idea of the size and significance of the exchanges and also some idea of the valuation. I look at it more from the size and significance point of view. If you look at the data over more than 10 years, at its peak, our market has not been more than 34% of the GDP in terms of size. As of today, it's about 16% of the market size. Again, to put it in context, I just looked at some comparable numbers. These are from the World Bank for 2018. The high-income countries' market cap to GDP is around 120%. For the low and middle-income countries, it's about 50%. To compare with India, currently it's at 48% of the GDP. On an average, it's been about 75%, although there are times when it has exceeded. So again, when you look at, this gives you an idea of the significance, the size, the importance to the economy of this exchange. And I think, as Mahin also pointed out, really, is it as big or as important as we make it out to be? It gets a lot of press. It's one of the glamour areas anyway. The stock exchange mein kya hua? But really, is it performing any of its functions? Is it playing a useful role? That's the question. Finally, this is something I would expect would be up for discussion. A number of areas, I think a lot of people have pointed out on the regulatory side. I think the regulator has a case to answer. But if I look at it very specifically, very focused on what is the issue with the PSX, the key issue to my mind is governance. The exchanges, as I mentioned, were owned by the brokers or the trading right holders, and the exchanges were essentially run for the benefit of this class. Now, the demutualization has happened, but the mindset has not changed. I spent 2 years on the first board of the Pakistan Stock Exchange from 2016 to 2018, and I can tell you, just to recap, any normal company has shareholders. The shareholders then elect a board of directors. The board of directors then puts in place a management, and each of these levels delegates certain powers to each of these levels. Now, sitting on the board of the exchange, I saw repeatedly where some of the elected directors would say, "Ki haan, ye to theek hai, but we need to check with the brokers." Bhai, brokers ne aapko elect kiya hai, shareholders ne elect kiya hai, you perform your function. You cannot refer back on every little issue to the shareholders. It's not done in HUBCO, it's not done in PSO, it's not done in any listed company. Going down one level, the board of directors in turn would not properly and still have not properly designated or delegated powers to the exchange. I still remember this one instance where a certain office space had to be rented out, and this matter came to the board, and we all said, what's happening? I mean, why is this not something that can be delegated? So to my mind, the key issue is governance. I think Akif also made the point that this business is not run as a business. It is operationally not profitable. The only way PSX goes into profits is when its dividends from its subsidiary or affiliate companies, CDC, National Clearing, etc., are included. So that mindset of running it as a business, and I don't just mean the financial parameters, then any business has to think in terms of its strategy, its growth. It has to think in terms of its stakeholders. For example, by and large, the investors and the issuers, the listed companies, wherever I still think are not really a great constituency or lobby which has a say. And the exchange in general does not really care about these people or does not really consult them. So these are some things that any proper business looking towards growth, looking towards expansion, product development, the other area, it's very much a cash market. The growth globally over the last 10, 20, 30 years has been on the derivative side. And we, again, as living with this very primitive cash settled futures, I mean, so a lot of things to be done. Yeah, that's it from my side. Thank you.
Thank you, Samir. Thank you. That is very nice. So I think the bottom line, folks, as you can see, is much as you hear on the news that the stock market has gone up or down, but it really doesn't mean much. The stock market is just a little sideshow that's going on. There seems to be really no capital market in this country, which is very strange. And quite frankly, the key issue that everybody's throwing out is governance and regulator that killed it. So it's really the bureaucrats or the whatever, I shouldn't say, but I mean, whoever is in power in the government who's kind of ruining it because there's no conceptualization, no clarity. Now, let me tell you a couple of things. I have Khalid Mirza here, but I want Khalid Mirza to do this next week so that he can probably elucidate much more clearly to us what happened. He's also the chairman of the policy committee and chairman of used to be the founder of the SECP. So we'll take this up with Khalid Mirza next time. But a couple of things I might say. I mean, Mahin said something on consumption and savings. I think we've also got a lot of myths in this country that we are a low saving country and we don't that we consume too much. We're a consumer economy. This myth has been going around and perpetrated by my friends, my colleagues, the economists. But we at the PID challenge it, and sometime we'll take that up too. Now, let me just do this. Product development. We don't have any product development. We're still stuck with the same old shares. I mean, the packages in the, Kohinoor, etc., have been hanging around for 50 years now. I don't know where they're going, but that's beside the point. So let me go to the questions now, folks. Let me let you guys take over the discussion. Who wants to go first, please?
I'll go first, if that's okay.
Please introduce yourself, please.
Sure. My name is Bilal Siddiqui, and I'm curious to hear the panel's thoughts on how can we encourage more foreign investors' participation in Pakistan. Some of these pension funds in Canada, sovereign wealth funds in the Middle East, they're looking for returns of 7 to 8% per year. And it seems as if Pakistan is a place that could potentially offer these in terms of infrastructure and other projects. So what particularly would you like to see in terms of ease of doing business?
Okay. Great. Thank you. Good question. We'll collect a few questions, then we'll go to the panel. Okay, go ahead, folks.
Nadeem, Asad Ali Shah here.
Go ahead, Asad. Go ahead.
Well, I have a comment, and I think it's very, something similar to what you said. I totally agree with you that in the last many decades, we have done a complete mess up, especially the regulation. The perspective by AQIF, I think, needs to be expanded. One of the biggest issues in Pakistan is that our regulatory frameworks and the regulators have been messed up, whether they be the sector regulators like NEPRA or OGRA, the power sector issues and the gas sector issues that you see. Very pathetic, regulation, and even SECP. It has not been regulation; it has been strangulation, to say the least. When you look at the cost of the regulation, the fees that the SECP has been charging, and the mindset of strangulating the markets, I think we need to have a separate discussion on that. And one thing that AQIF said, I also disagree with him. He said that there is no clarity with regard to the oversight role, or probably he was referring to the policy board in the SECP Act. I think there is enough clarity on that. The law is very, well drafted. The issue is that there has not been an effective policy board for a very long time. And then the other issue is that I think it's a very good structure, but the problem is that part of the policy board comprises of senior bureaucrats, the three secretaries and the deputy governor of the central bank. Now they never participate. This is one issue. Otherwise, I think if you have good eminent and a good composition of the board from private sector and combination with the bureaucrats, it's a very good structure. And as Maheen was saying, I think the markets must have felt the difference. For the last 1.5 years, I'll be very, very straightforward. I think the direction of the SECP has been changed. There has been significant move towards deregulation, cutting the fees, and allowing the markets to function. Unfortunately, we have this economic situation and this paralysis situation. But a lot of improvement can take place if we modify our approach to regulation, if we reset our direction, and if we allow people to operate in this, allow the markets and the participants to function. We have been strangulating that. So that's the brief. It's not that brief, sorry.
We'll get Khalid Mirza to do that next week, inshallah, and board too. So, but I think it's a very important point that you make, Asad. We kill markets. As a country, we kill markets. We've killed every market under the sun. But that's beside the point. Go ahead. Anybody else, please?
I'm Tahir, sir. Can I ask a question?
जी बोलिए. Please introduce yourself. Tahir Dinsa sahab, बोलिए जी.
Yeah, I'm Tahir. Nadeem sir, it's a pleasure to see you again after some time. And I have, perhaps you might not know, I have worked for some time for the Securities and Exchange Commission as well as the investor education program on wealth. And when I was there, the chairman was removed. And you know, the headline was Chuti ke din chuti. And a political party managed that because they want to give a support in the parliament and the government need that. And one thing now coming to the present time, now we all know that demand suppression is the norm and the supply side is in. And supply side is a planning. We have to find out new areas where to put our capital and efforts now. And it's putting already going towards the dictatorship. Even the Henry Kissinger says that this liberal democracy is out of norm. So do you think it's a very bad omen for capital market? Because the regulator
liberal democracy फिर करेंगे, कोई फिक्र ना करें, इंशाल्लाह करेंगे.
Nadeem sahab, can I ask a question?
Yeah, Amir, go ahead, ji.
Yeah, thank you very much. First, I just wanted to encourage Maheen. I mean, honestly, her suggestions on multiple stock exchange is very nice. Two questions. I think they are both to be taken by, anybody can take them, I guess, of the three. First is, so in the absence of this major market, the absence of a stock market, where are these markets? Can you expand? Can any one of them say, where are they? Because if we know where they are and what's happening informally, maybe then we can find some way to formalize them. Are these the RTs? Is this happening in Jodhia Bazaar? Is this the informal credit and banyas through which where are people, where are these markets happening? Secondly, what is the role of real estate in keeping stock market at bay? I think that was alluded to perfunctorily, but I think we want to hear a little bit more about that.
Okay. Anybody else, ji?
Nadeem sir,
can I ask a question? जी जनरल साहब बोलिए.
जी, from a layman,
जी
मुझे दो चीजों की जरा वजाहत चाहिए. नंबर एक कि तमाम लोगों ने जो बातचीत की है उसमें रेगुलेटर्स को कसूरवार ठहराया गया है कि जी ये लोग बहुत टाइट पॉलिसीज रखते हैं और इन्वेस्टमेंट फ्रेंडली नहीं होते. आप सब लोग जो हैं ये वेस्टर्न ट्रेंड हैं. None of the bureaucrats and none of you who have managed the government affairs in one time or the other have been trained in the socialist countries. So मुझे ये बात समझ नहीं आती है कि जब आप सारे वेस्टर्न ट्रेंड हैं जहाँ पे एक नॉर्म है ओपन मार्केट्स का, तो ये फिर जब आप लोग कुर्सियों पे बैठते हैं तो क्या तकलीफ होती है? क्यों नहीं ये डीरेगुलेट करते, क्यों नहीं ओपन हैंड करते? आजकल जो एडवाइजर्स हैं और जो आपके चंद एक मिनिस्टर्स हैं वो भी वेस्टर्न क्वालिफाइड हैं, बड़े बड़ी टॉप पोजीशंस पे रहे हैं. My second query is कि ये माहीन साहब ने कहा था कि हमारे जो सेविंग रेट्स हैं दे आर द लोएस्ट इन द वर्ल्ड. ये हम बचपन से सुनते आ रहे हैं, लेकिन आप मुझे ये बताएं कि वो गरीब आदमी क्या करे जिसको आप इतने कम प्रॉफिट देते हैं? वो कहाँ पे पैसा लेके जाए, वो क्यों रखे? आजकल जो एक स्कीम है जिसमें लोग इन्वेस्ट कर रहे हैं आपकी सेविंग सर्टिफिकेट्स, क्योंकि वो एक स्कीम है जो शायद 13% देती है. बाकी तो तमाम बैंक जो हैं वो तो चूज के खा रहे हैं गरीब को. वो कहाँ इन्वेस्ट करे, किस में करे? एक छोटी सी मैं मिसाल देता हूँ. कोई प्रॉपर्टीज बिकी, वो हमने पैसा जमा वो बैंक में रखा हुआ था, तो बैंक वाले वो प्रॉफिट देते हैं, ये जो इस्लामिक बैंक वाले हैं, तो विद होल्डिंग टैक्स के अलावा वो अचानक 7% मजीद उसके ऊपर उन्होंने टैक्स काटा कि भाई ये क्या हो गया. तो पता चला जी कि गवर्नमेंट की पॉलिसी के मुताबिक जो भी कटिंग होगी उसके ओवर एंड अबव अगर ये 1.5 लाख से ज्यादा प्रॉफिट हो तो 7% मजीद काटा जाएगा. तो फिर क्या करे इन्वेस्टर, क्या करे वो गरीब आदमी जो इन्वेस्ट करना चाहता है लेकिन उसको रिटर्न जो है आप लोग इतनी कम देते हैं?
Very good.
Thank
point.
you.
Good point. Anybody else?
This is Bilal chipping in again. I want to make a quick comment about what Samir showed in his slide. He showed that the number of listed companies in Pakistan was going down. I think that's a sort of a global trend, whereas even if you look at in the US, given the regulations associated with operating publicly, a lot of companies have chosen to remain private and raise capital from the private market. So is that really an alarming sign, or is that something that's just going on globally?
Fair point. Good question. Good question. अच्छा जी, चले जी फिर. Let me.
I have a question. Yes, Nadeem, can I talk?
Go ahead. Go ahead.
जी, I joined late, so मुझे presentation नहीं पता चली थी लोग. जी, Nadeem, can you hear me?
I can hear you. I said introduce yourself.
My name is Ali Khizr. I'm an economic analyst and I worked in the capital market as well, and I write for Business Recorder. I missed the presentation, but I would like to watch it later. But my thing is, based on the last question, is this: the listing in Pakistan is very low. And if you see in the past many years, बहुत थोड़ी listing होती है, market के अंदर depth ही नहीं आती है. So when we talk about the stock market and when we talk about the mutual fund as a whole for an instrument of savings, जो saving to GDP Pakistan में बड़ा low है, and that's one avenue which is completely missing for large part of the population. आपके जो UIN है, जो unique जो आपकी investors हैं, वो बहुत थोड़े हैं. And mutual fund की penetration भी बहुत कम है. So that is one area we need to work on कि जी इसको हमने कैसे बढ़ाना है mutual fund के through और उसके through. और दूसरा listing को कैसे लेके आना है. अब पाकिस्तान में कंपनीज लिस्ट नहीं करती, जैसे यही बात है कि उनके इश्यूज जो होते हैं टैक्सेशन के वो होते हैं, और इवन जो कुछ ग्रुप्स हैं जो अपनी कंपनीज को लिस्ट करते हैं, वो ग्रुप्स भी अपनी सर्टेन फॉर्म ऑफ कंपनीज जो होती हैं जिनका फॉर्मल बिजनेस आता है उसको करते हैं, जो जिसका बिजनेस फॉर्मल नहीं है उसको नहीं करते. मसलन रियल एस्टेट के अंदर आप देखें कि आपका एक रीट लिस्टेड है, वो आरिफ हबीब और डॉलमेन का, अगेन वो भी बन गया, उसके बाद उन्होंने लिस्ट किया, बट अब मियां मंशा का, नकी का, इन सब ने अपने मॉल लेके आ गए हुए हैं, और ये सब डेयरी के बिजनेस में भी हैं, बट इनके बाकी सारे बिजनेसेस इनके लिस्ट होते हैं, हर ये बिजनेसेस क्यों नहीं लिस्ट करते. और बाकी जो बिजनेसेस लिस्ट हुए भी हुए हैं, टेक्सटाइल जैसे एक जमाने में बहुत सारे लिस्ट होते, बड़ी ही उसकी वो माइन्यूट सी वो होती है जो वो फ्री फ्लोट होता है. सो अगर हम एक कैपिटल मार्केट को वाइब्रेंट करना चाहते हैं, स्पेशली इक्विटी मार्केट को, पहले तो हमें लिस्टिंग करनी चाहिए. हमारे एसएमई का लिस्टिंग काउंटर बना हुआ है, उस पर आज तक कोई लिस्ट नहीं हो सका, ऐसी क्या वजह है. हमारे रियल एस्टेट कंस्ट्रक्शन पैकेज आता है, उसमें रीट्स या फॉर्मल की बात कहीं नहीं होती. तो दैट्स वन एरिया कि जी हमें अपनी इसकी मार्केट को डेप्थ को कैसे बढ़ाना है, दैट्स वेरी इंपॉर्टेंट. और दूसरा है कि इन्वेस्टर बेस को बढ़ाने के लिए म्यूचुअल फंड कितना एक्टिव रोल प्ले करते हैं. प्लस आपका डेट कैपिटल मार्केट एग्जिस्ट नहीं करती, आपकी कंपनी जो वो जाके वो नहीं करती. तो अगर कैपिटल मार्केट की वाइब्रेंसी चाहिए तो यू नीड टू हैव मोर पीपल इन्वेस्टिंग इन इट. यू नीड टू हैव लाइक household wives investing in it. You need to have those like your driver, your those 2,000 रुपया बचा के वो म्यूचुअल फंड में डालें. That's not happening. उसको कैसे करें?
ठीक. देखिए जी, चलें जी. If there's nobody else, let me turn to the panel.
This is Moeen Bartley. Can I ask something?
Go ahead, Moeen. Go ahead.
Great. Thank you. Ji, basically, in term, let me just right. So. My question is that I have a background in investment banking regulation as well.
Ji Moeen, hello, I can't hear you.
Startup on CPEC investment. My question, Ji, is basically on regarding the Chinese stake. So the Chinese have a 40% stake in PSX. So it doesn't seem that that they're that proactive, and how can we learn more from have more sort of linkages with the Chinese markets and have the Chinese involvement in PSX be a force for change? That's my question. Thank you.
Good. Acha ji, let me turn to the panelists then. I just want to add a couple of things, very simple. कि जी, I think हमने सबने सुन लिया है कि बहुत बड़ा problem है. It's a huge problem. It's something that the government should be doing an emergency take on, and I hope Khalid Mirza next week will clear it. But the key issue is that we have created tax and regulatory mess, which we have created everywhere. Everywhere the tax policy is a disaster, and we've done a seminar on tax policy. We're going to do another one. Tax policy is a huge disaster. So is regulatory policy. Unfortunately, we don't know either, because we want to do both of these things on the fly without thinking and just tacking on things here and there. The other question that I want to raise is that the real estate issue. So the first question that I want to raise with you is, How do we solve the tax regulatory problem? Is there any thinking on it? Do you have any thoughts on it? The second question I want to ask you is this real estate thing that Amir raised too, and that was raised by some speakers too. I think there's a big myth. We've just done a study at PIDE, and we are putting it out, I think, today, that real estate returns are not as high as the stock returns anyway. So the real estate is not pulling any money from the stock market. I think it's a huge myth, just like consumption is a huge myth. We have to live beyond these myths, and we have to start investigating these things. The third question I'd like to say is, what role is the mutual fund industry playing in the country? Because it's such a small industry, it's just a vanity industry. I don't see it really playing any role at all, because it's not an instrument of choice. It's not doing anything with money management. It's really doing nothing. The third, final question, as Moeen Bartlett said, I'm really worried about why did the Chinese take a stake in the stock market if they're not going to do anything with it? So who wants to start? Samir, why don't you start since you came in last, and we'll go backwards. Samir Ahmed, can you hear me?
Hello, can you hear me?
We can hear you. Go ahead.
Okay, great. Chinese stake. I was on the PSX board when they joined. I don't know, either they have a very long-term game plan. At least while I was there and I left 2 years ago, I could not understand. There were a lot of issues which came up where I, on a personal level, would ask them to assert themselves, because obviously they came in as shareholders and they bought the share at 28 rupees, which is, since then bottomed out. I think partly they were finding their feet, partly there were issues during that time with the SCCP, where once Akif left and another former chairman left, the SCCP was up to certain funny things, and I think the Chinese negotiated with them, sat with them, but they didn't really want to rock the boat. But yes, I think that's one of the great mysteries to my mind also, that what is it that the Chinese have in mind? What is it that they're pushing the management to do in terms of, creating a solid, viable business? As I mentioned earlier, and Akif also, it's not run properly as a business. Even the financials are out. The cost structure is out. They don't recover their costs in a lot of areas, because again, those vested interests are taking certain services at below cost. दूसरा जो सवाल था, I think Bilal साहब asked about the foreign investment in the foreign markets. In terms of foreign investments, as you know, this is one of the, I think, freest markets in terms of money coming in and flowing out. My understanding of the numbers is that at one stage the foreign investor held maybe 8 or 9% of the market. Although if you look at it in terms of the free float, which is maybe 25%, they were holding maybe 1/3 of the market. The foreign investment as a whole over the last couple of years has gone down. Now, these could be not Pakistan-specific issues, although there was one issue 2 years ago when we moved from the emerging markets to the frontier markets. Most of these fund flows, I mean, there are some specific fund managers who take a view on certain markets and certain companies and so forth, but I think the larger flows are tied in with the, fund flows. For example, if money is going into frontier markets funds, then it will, all markets will benefit. If it's going into emerging market funds, all markets will benefit. And in the last, for example, if you just take the example of the last 2-3 months, there's this risk issue, so money has flown out of these markets. The other final point Bilal Saab made was regarding listings going down in developed markets. He's absolutely right. Listings, and this is related to the rise of private equity. And this is something that is worrying some of the foreign markets also. For example, previously, you'd have companies like Facebook or Uber coming into the public markets at a much earlier stage in their growth, and thereby sharing that benefit of growth with a larger number of investors. Now they're coming to market at a stage where most of the juice has already been extracted by the private equity investors. So that's one mega trend that is taking place in the developed markets. My point about the Pakistan market is that, sure, there will be some delistings, partly because of mergers, consolidation, and some companies which do not wish to, be subjected to that stricter regulatory regime and so forth. But the other side of it is कि कुछ तो listings interesting zone. You know, two companies a year, and this year 0 companies. That's just not right. And I relate it also to that market cap to GDP. ठीक है, private markets हैं, private equity अपनी जगह, but फिर भी public markets का कुछ size, कुछ significance होना चाहिए.
Okay, great. Mehreen, would you like to go next?
Sure. Okay, so lots of points raised. I think, look, on foreign investors, we ourselves have been trying to tap foreign investors for a while. I think one big issue that comes up is Pakistan is not a recognized jurisdiction on the regulatory side. So a foreign investor is forced to do significant due diligence of their own before they invest in this market. Even though we have tremendous regulation and some of it is more onerous, I think, than other jurisdictions, Pakistan is just not recognized as a capital markets destination because of whatever structure we operate in. So that means that our conversation with foreign investors really starts with, okay, well, what is your regulatory framework? And we'd like to bypass that and get into what is the business story of investing in Pakistan rather than just talking about the regulation. I think we have been talking a lot from the mutual funds platform about investing, foreigners being able to invest directly into mutual funds, and that's a conversation that we continue to have. But we find that it is challenging even when we bring it up through the SACRA mechanism, which invests in the stock exchange directly. That we do end up with custodian issues or custodian banks not being willing to take on that AML risk because we are now under a FATF grey list as well. So I think those are two things that would help tremendously in getting foreign investors more interested in the country. I think the question that keeps coming back here is on consumption versus savings and the role of mutual funds in terms of what has happened. So I'll address one at a time. I think whether it is a myth, whether we're consumption-led or not, the reality is that where are the markets? I think that was what was thrown out. So since I would say the last 6 or 7 years, we have seen the informal sector pick up very dramatically. So while we say there are no formal perhaps assessments of how much saving we are doing, I would say people certainly are saving, but they're doing it outside the formal structure. So we are looking at committees, we are looking at real estate, we are looking very much at NSS, which is a formalized structure, but I'll get to that in a bit. And we're looking at gold or property assets. Those tend to be traditional savings and investment routes for us. How do mutual funds fit in? They do fit in. I've been in this industry now 10 years, and 8 of those years was spent fighting various different tax and other regulations that had very ad hoc, I would say, been imposed on us. The key things that we raised with the SECP about 2 years ago related to one, eliminate our taxing distortions, which was done. We also asked to reduce overall fee structures on the SECP side, which was also done. We also asked that we be allowed to take on expenses. As mutual funds, we work on very minimal spread. So we work on a 1% fee on average across the industry. You compare that to the insurance sector, the life insurance sector, which is operating at a much higher spread and is allowed to charge almost 60%, of initial premiums as commissions to themselves. You look at the banking sector, which is allowed to charge up to 5-6%, earns that spread. So when it comes to mutual funds, we operate on very thin spreads, which naturally affects our ability to market, and it also affects our ability for outreach. Just in the last 2 years, we have seen a lifting of those controls. We have seen a lifting on the sales load charges. We have seen an allowance to tag on expenses into the funds, which is something that we were asking for the last 8 years or so. So, there were a lot of impediments, I would say, in the growth of the mutual fund industry, which is why, fiscally, we were not able to expand. But if you pick up the way the mutual funds have grown, even in a down cycle market, and you pick up from July 2019 to today, I would say the industry has actually grown by about 20+%, even at a time, and we've added on close to, I would say, almost 90,000 new investors into the mutual fund space. So, the release of some of those controls did have a big flip up on the industry, and we continue to work with the regulator in terms of building out our own channels for distribution. Now, coming back to NSS. So NSS, unfortunately, this is a distortion. And if I had to put a finger on what really impedes people from saving and investment, I would say the fact that you have a risk-free return available to you with zero risk, which is and a return which is completely uncorrelated with the way actual returns are running in the market, I would say that is really your NSS system. You know, if the government was looking at delivering a return that was commensurate with risk, because these are the two parameters that are the basics of investing and the basics of saving, is that to earn return, you must take on some risk. Then we have abundant opportunities in the capital markets today. You have the share market, you have the treasury bill and the PIB market, and you have mutual funds, and you have insurance schemes. All of these give you a certain return for the amount of risk that you are willing to take on. But on the other side, you have NSS, which offers you absolutely no risk whatsoever, and yet you can walk away with very steady return that is not linked to any, or linked with an immense lag to any market-based phenomena. So whether you're you will always have a propensity to go down that channel as opposed to actually take on the real risk and return formula. So until you are in a position to address this question within the NSS, you cannot see capital markets develop, because as a basic investor, you are always going to flow to wherever you find the highest return at the lowest level of risk, and that is something that is available in NSS. So that anomaly, I think, needs to be addressed, even if it is done by rationalizing the returns that are offered on NSS. Not only would that actually make it a market-based saving scheme, which is where it should be, but at the same time, it would save the government hundreds of billions of rupees in interest payments that they make out to these schemes. So both sides can benefit from this. And I think our average investor or consumer, whether you talk about a housewife or you talk about anyone, a sophisticated investment banker, everyone understands this concept of risk and return very well, which is why you are in this situation where you have an anomaly. It's sort of the elephant in the room when it comes to all capital markets. And that until that really gets managed in a better way, you won't see that differential come through.
Thank you. Can I turn to Akif now? Akif?
Anything specific, or should I pick
whatever you like
on my own? Okay.
Well, I have something specific, but I'll raise it after you. But go ahead.
Okay. I think the first one was the ease of doing business, which both Maheen and Sumit touched on, based on my experience and interaction with the fund managers. As far as the framework is concerned for coming in and coming out for a foreign investor is pretty liberal and in place. And it's something which we've seen very recently in case of carry trade also. The missing link, and this is something which I'm saying from experience back in 2016 and 17 when we were in sort of reclassified from frontier to emerging market, is the marketing itself, particularly at the exchange level. Going out and actually presenting the Pakistan as a package to the foreign investors. Then there was a comment made on NSS, which was elaborately touched by Maheen. I think there is, and if you put in numbers, they've got about 4 million, some say there's up to 7 million investors. But of course, there are certain structural flaws in it, but there is a certain social aspect attached to it. So if people who are retired, widows, where do they go and invest? I think this is where NSS has a role to play, but subject to two things. One is, of course, the digitalization. So there's no double dipping in terms of people investing through different branches and violating the limits. And second, of course, what Maheen touched on in terms of the rate. They should be market rather than not above the market, risk-free above the market, which is an anomaly. Real estate, you touched on. I think real estate, apart from return, because nobody shares their fiascos in public, success sort of shared much frequently that I made this much of money on a file or a plot or blah. But of course, there is another aspect apart from return is the documentation. This is something which we saw back in 2010 when after X number of years, the capital gain tax was finally imposed. Suddenly the liquidity dried out and there was no trading until 2012 when the whole system was automated. So technically, if anybody who comes in and trade at exchange has capital gains, makes a capital gain, it is captured automatically. I think that is one aspect which documentation is, which inhibits people, and they prefer real estate as an asset class. Ahmed Durrani mentioned in terms of multiple exchanges. Yes, this option is available. This is something which was even discussed at the time of divestment with the Chinese investors also, because between the lines and at times openly, some sort of regulatory comfort was sort of asked that there will be no further exchange for like X number of years. We refused that at the time with SECP, that your performance would be the benchmark rather than any regulatory intervention. So option is there. Of course, the purpose of that exchange, whether it's a technology exchange or a debt market exchange, my own sense is Pakistan needs either at PSX or a new exchange where we can trade government debt and corporate debt. And of course, technology is also, because at the moment, the government debt is primarily limited to the banks as a primary dealer and in the secondary market also. That's an area which should be looked into. That's it.
Thank you, Akif. Thank you, folks. Let me just say this, KG. I think, quite frankly, in Pakistan, we always think of creating a new office. And we have the NDMC, we created another office. We have another offices after offices we create. So I think it's the same thing that we have about the stock exchange. Let's create another one. I don't think it's creating another one that'll do it. I think we really have to. The other thing that we have also, which is very also important, that everybody looks to the other guy. Hey, I'm too short. Kill the other guy. Cut the other guy short so that I can be taller. So everybody's looking, and Akil Daddy does this every night. I wish Akil had joined us today. I must get him to join us next time. That, blame the real estate, blame the real estate, blame the NSS, blame the NSS. No, I'm sorry, there's nothing wrong with the NSS or the real estate. What is wrong is the stock market. Fix your own market, make it more attractive, people go to it. Real estate returns in the US are very good, and people go to the real estate, but they also go to the stock market because the stock market offers competing returns. As I said to you, we've analyzed 10 years data. Stock market is actually offering a better return than the real estate, such as it is. People go to the real estate for whatever reasons, and I don't buy this documentation story. I think this is also another load of another myth that we've created, and especially capital markets people have created. So I think we'll have to discuss all these things. They're very complex issues. We have too many myths. We have too many sort of preconditional, sort of judged notions that we live with. But I want to go in another direction right now, very briefly. I see Sisra Jayasuriya here. Sisra, can you please come online? I was in Sri Lanka 20 years ago. In Sri Lanka 20 years ago, had an active stock market. It had a very vibrant takeover or merger and acquisition market. Their best companies have traded are diversified, very widely owned, and they go into many different, they've changed hands many times. If you think of packages or if you think of Unilever or whatever, they've changed hands many times. So Sisra, can you please tell us about the Sri Lankan market now and how would it compare to what you heard today? Sisra Jayasuriya, Sri Lankan professor in Monash University. So go ahead, in Australia.
Hi, Nadeem. I wasn't really thinking of contributing to the discussions. I was going to listen in, learn something about the Pakistan market, but I suspect that Sri Lankan market has lots of issues, but it seems to be doing better than the Pakistan market, even though we do have standard issues, as you well know. There are always problems with interference, insider trading isn't as well.
But what amazes me is the large companies like it's Spence, like John, whatever, I forget now which company it was. The major companies, they are owned, they're owned by a large number of people. They're not owned by any individual. And they have been taken over 3 or 4 times that I've noticed. Is that correct?
Yes. So it's an active market. There is a lot of activity, and we have had significant foreign interest. It has been volatile, because we have gone, and the volatility is primarily related to the political issues in Sri Lanka, and of course, to some extent, what's happening globally. But by and large, it, compared to 20 years ago, even when Nadeem, you were in Colombo and active in it. Yeah, the market is much more broad-based. A lot of activity. Small investors actually invest in the market. So it is, in that sense, a growing market with growing pains, probably too many growing pains still, but yeah.
Okay. Thanks, Isra. There you go. That's what I wanted you to hear, that it has been done in the subcontinent. It is happening in Sri Lanka. It is, Samir told you, it's happening in Bangladesh. Ladies and gentlemen, it is us that we are failing, and I submit to you it is because of our lack of clarity, lack of conceptualization. We tend to make agencies and rules too liberally, without thinking, without clarity, and it is biting us in whatever part of the anatomy you might want to think about. We've got a tax policy that is 19th century, we've got a regulatory policy that is 19th century, and we at PIDE do want to solve this problem. We will continue to hold these seminars. Next week, we'll do one with Khalid Mirza and a few other luminaries. We want to open out this box and see where we are going, what's happening. So please stay engaged, join us again. So unless somebody has anything to say, we shall bid goodbye. Okay, folks, thank you very much. Thank you very much. Hope to see you. By the way, we've got another seminar on Thursday. On the corporate governance of the firm of the future, coming up with some young entrepreneurs. That's on Thursday. Thank you. All the best. Bye-bye.
Thank you.